Phil Cohen here, Cohen on content, all things digital, digital out of home at the Digital Signage Expo. And I just saw Mark Boidman. I got to tell you, first of all, Mark, he's probably one of the most knowledgeable bankers in our industry. Barclays Bank, is that the right word?
Barclays Capital.
The name, Barclays Capital has been around our industry for years. Mark has spoken at the Strategy Institute's investment conference in New York, and everybody listens with rapt attention because he knows from whence he speaks. And I see you over there joining the Digital Signage Federation, and I asked you why, what's in it for you, but then I found out this guy's going to be unrestrained from helping more and more networks and companies within our industry soon, which I'll leave for him to tell you when he wants to. But right now, Mark, you just joined the Digital Signage Federation. You're a banker. Why?
Well, look, it's a great asset in terms of getting information, the network. To me, it's all about information in this space, and it's hard to find information. You have a lot of companies, a lot of small companies, and a lot of these small companies, they're like black boxes. And to get access to them and understand what they're doing, you need to know people and you need to have a network. So I think this is a great network to be in and to have.
That's so. You know, somebody else mentioned networking a couple of times. You know, a lot of people mention education, but I can see, yeah. Well, I'm glad you joined. You want to tell us what's going on in the banking world these days?
Sure. Look, the M&A market is quite strong and quite good, as you know. This space, the digital out-of-home space, has always been what I would call a space where there are transactions to be done. However, there's a lot of skepticism, and everybody is nervous about making an investment today. Investors, you know, when they think about making an investment in out-of-home, and especially digital out-of-home, they're always thinking about, you know, why shouldn't I make the investment? And the problem is, it's all about the investment horizon. And when they make an investment, they're looking about making the investment today, but also where will this space be in 5 years? And there is a tremendous amount of growth in this space. The problem with the out-of-home business in general is you have a very traditional business that's about to have some kind of a shift. And whether the out-of-home space is like where newspapers was 5 years ago, that's how people think about out-of-home. And so when it comes to digital out-of-home, I always say this whenever I meet with clients, no chief marketing officer is ever going to be terminated for making a huge campaign on television. However, when it comes to digital out-of-home, there's a lot more risk, and you need to really understand the space and understand whether the space is accountable. And it is accountable, as you know.
Highly accountable. Highly, I mean, we're measured on a constant basis, electronically and face-to-face with the Intercept studies. Arbitron is very, very strong in our industry. Nielsen, a lot of the measurement companies, but even more so in mine, where we're medical, the prescription writing, the advertisers can see immediate lift and shift based on the numbers, the codes that are used for the writing and purchasing prescriptions. So the measurability is there. I'm a little surprised that there's still questions about it, but hey, you're the banker, you're the guys that put money into it.
Yeah, look, I think the questions will be answered as more time tells and people actually see the proof and they see that these networks are accountable on the scale. Scale is everything in this business, and as more of these networks consolidate and there's more scale, I think that a lot of marketers and chief marketing officers are going to actually see the real value in this space. And frankly, all media is converging, and so digital media, digital out-of-home, it's all coming together. And so as traditional out-of-home becomes sort of like where newspapers was 5 years ago, and they actually wake up and people in the industry say, yes, we currently have a revenue stream, but what's going to happen to that revenue stream in 5 years? I think that's what investors are doing today. They're looking at this space and saying, in 5 years from now, the digital out-of-home space will be a better space, a better understood space, and there'll be more scale. Today, right now, you have a lot of very small companies. Some have scale, but most don't, and most are unproven.
Yeah, that 5 years seems to be magic. I know in different networks that I'm involved in, whether they were venture funded or funded by individuals. They seems like they're looking for that, not just where you're going to be in 5 years, but what's my exit in 5 years?
That's right.
And how well can I score? I think now that we're 10 years old, as 15 years old as an industry, 10 years old as this organization, that we're starting to see that 5-year plateau hit a number of networks, and like investors are scoring. So I think that we're coming to that point now where networks can come to people like you, businesses like yours, and say, okay, here's what we did last time, so here's why we think we'll do it like this next time, and you've got a track record to talk about.
Yeah, look, the digital out-of-home space continues to grow faster than television, faster than radio, faster than traditional outdoor. So as a medium for advertising, digital out-of-home is a medium that will be here and will continue to grow faster than these more traditional forms of media. So the idea for an investor is to say, okay, there's a lot of growth in this space. Should I pay for this space? Is it something that's proven? And as more companies, to your point, continue to be profitable and continue to show what I would say is scale and more scale because of acquisitions through organic growth, that's going to attract more investors into this space. Because today, the investor is a venture investor or a growth equity investor for some of the more mature companies, and even that is very, very early stage investing. So when I look at investors in this space, the more traditional private equity firm is taking a step back and wanting to sort of see the growth play out more. Whereas growth equity investors, they recognize the opportunity, just like venture investors, and so they're ready to put dollars into this space. The problem is there are very few companies in this space, as you know, that are cash flow positive, and those that have not had a track record of being cash flow positive for a very long time. Right. And so therefore, the investors that are interested in this space are investors who have a lot of experience in the space and know the space. And it's not a complicated space, but there are very few investors who've taken the time to understand the space, and those investors who have are prepared to put money to work in this space.
That's why you guys that have been in the industry make some money.
That's right, that's right. Now we just need to get the strategics, and when I think of strategics, everybody thinks of traditional outdoor companies as strategic. When they think of digital out-of-home, they think of digital signage. When we think of digital out-of-home, we think of, yes, digital signage, but we really think of digital networks. And once the scale is there, and once the cash flow numbers are big enough to move the needle for some of these larger traditional outdoor companies, they will want to be in this space. But right now, digital out-of-home companies are just too small. There are not enough of them that are cash flow positive, and they don't move the needle. In 5 years from now, you'll have increased consolidation, you'll have more companies that have scale, and those companies will be very attractive to the traditional outdoor companies.
What can somebody do that has to face the negatives that you put out, but needs to start a digital out-of-home network, or has proven concept and needs to grow a digital out-of-home network? How can they overcome some of those issues?
Well, they need to educate investors, and frankly, if people understood that traditional outdoor and traditional digital signage, as I call it, it's glance media. But if they understand that, when we think of digital out-of-home networks that have real content, long dwell time, CPMs that are quite different than traditional outdoor and traditional digital signage, there's a real connection. And today, the consumer wants a connection. They don't. Glance media is glance media, but when you have a digital network that's got content wrapped around it, the consumer will be much more attracted to the advertising and view that advertising as authoritative and trusted, and its content in itself.
And that's what people have to do that are trying to expand those networks now. Mark, that's why people want to come listen to him speak, because he knows from whence he speaks, and he can explain it so that we can understand it. Even I understand what the guy's talking about. Mark, thanks a lot, man.
Thank you very much.
Thanks. I'm glad I grabbed him down on the aisle, right? He'll see me in a little bit. I got some more of these to do.
Thank you.